Hey, Sanbona, hello everyone. Welcome back to the Trend Trader channel. So I hope that from your side you can hear me. So if you can hear me, just please click the like button, or you can just comment to say that you can hear me. So it's been a while since I made the video. There were a bit of some issues for live streaming, but we still continued to upload a bit of some videos, as we were able to upload some videos. So today, as you can see that we are live. At some point we will be responding to your questions, but what I want to do at this moment is to cover a few things before I can before I can ask you to type in your questions, right? So as promised, but before we start, I just want to first cover this. Don't forget that we have this free ebook. You can get this ebook in one of our links there. It's available on Gumroad. It's free of charge. You don't have to pay for it. We created this ebook so that we can assist new investors, beginner investors. As you can see, you just put in 0 there. Don't pay for it. There's no need to pay for it, but there is a benefit if you wish to pay for it. But the intention is that you can get the ebook for free. The ebook is going to help you with different kinds of classes that are available in the stock market, and then it will help you to understand the risk and volatility in the market. And then it also covers the different kind of stocks. We speak of growth stocks, and sometimes we speak of dividend stocks. So that ebook will also help to highlight some of those things, and then how you can use the stock market to beat the inflation. As we know that our capital is always going to be at risk when it comes to inflation. So we need to ensure that we are able, through stock investing, we are able to beat inflation. And then also there are some free resources that you'll find there that you can use to get more information about ETFs, right? So yeah, you can see some kind people have already gave the ebook 5 stars. So we don't want to say that it's good because it's written by us, even though we know that it is good. But just go and check it. We'll leave the link. Once we are done with the live stream, we will edit the video descriptions and then leave the link where you can find it. But as you know, it's just on our Gumroad. If you visited our Gumroad before, you will find it there, right? So for the order of today, there are a couple of things that I want to cover. As you saw when I was posting this, I mentioned that we're gonna be talking the Russian and the Ukraine conflict there. So previously we spoke a bit about I just want to see where I'm at the moment. Yeah, so previously we said that we're gonna speak about the Russia-Ukraine conflict. Some people have been asking, I mean, there's talk everywhere on social media, even if people are just speaking on their own, they are wondering how can they benefit from this. We understand that it's a humanitarian crisis, so it's not like we're trying to profit from war, but the stock market, our goal is to continue to trade the stock market despite what is happening in Russia and Ukraine. So we've made a couple of videos to show that there were some opportunities that people can take advantage of. In some of these videos, we spoke about metals and mining ETFs that you can buy. We also covered some stocks that you can buy so that you can benefit from this. And then also we said how you can find stocks to buy during a stock market correction. So for those people that viewed these videos and then they traded the stocks, some of them made money from some of the stocks because of that high volatility that was experienced at that particular moment. Some commodity stocks, they really shot up really well, and we managed to benefit because we had a position there. So we were at the right place at the right time. It's unfortunate for the people that are involved where there is that conflict happening, right? So another thing that we saw there is that during a war, as we are seeing what is happening in Russia, there were companies. Remember that the stock market didn't just crash at the beginning of the crisis. There were companies that were strong before the crisis. So some of those companies, they remained strong. Energy stocks were strong. We had the positions in energy stocks even before the conflict. And then there were some other commodities like gold, even though we didn't have the metals in our portfolio, but we saw that the gold ETF went up, palladium, rhodium as well. They all went up, even though some of those reactions, they were just short-lived. They only managed to survive for a couple of days before the stock market pulled back. But that doesn't mean that you couldn't get in, make a bit of money, and then get out before the market recovers. And that's what we did in our portfolio. There were some positions that we entered, we were able to make that bit of cash and exit. For example, we had a position on Anglo Gold Ashanti, which worked well. We had a position on Goldfield. We managed to exit those positions with a bit of profit. Then now looking at the other sectors that were depressed before the conflict, we know that in the US, the tech stocks, they were severely under pressure. Some of them were performing poorly. We know what happened to companies like Amazon. Well, Amazon does a lot of things. It's not just a tech stock, but we saw that Amazon and Netflix at some point, not that the earnings were bad, but the stocks got hammered. They were down. Some of it were, I think, Facebook, or now it's called Meta Platforms. At some point, it was down by as much as 20%. So those were some of the weak companies. But if you look at Microsoft, Alphabet, and Apple, those ones they remained strong. And then last week we saw that by the end of the week the tech were trying to recover. Or another company that is worth mentioning is Nvidia. So those are the companies that managed to remain strong. We saw Nvidia pushing. I think on Wednesday we bought Apple, on Thursday we bought Tesla, then on Friday, just before the US market close, we bought Nvidia. We added Nvidia into our portfolio. So we started cutting down some of the commodity stocks. Not to say that they are now bearish. No, we just during the conflict, well, the conflict is still ongoing, but the energy metals were much more stronger than tech, so we were positioned there. So then we started to cut back and then buying some of those dips as they were trying to recover. Right, some people they still there in those dips, they're experiencing drawdowns, but that again, it highlights the importance of using a stop loss, so that if the market is pulling back, you are able to exit. Sometimes you can exit with a large profit. Sometimes if you are already in a losing position, you can exit with a small loss, and then when the market recovers, then you are in a position to start buying those companies back. And that is what we did with some of those companies, right? Like I said, that some new leaders will come back, because Microsoft, Apple, Nvidia, well, Tesla was hit a bit, but not severe. We expect Apple to continue to be a leader. That is why we bought the stock. But Nvidia was one of the companies that quickly recovered. So we were able to jump in on Nvidia, but we will share the chart as time goes by. So that's what I wanted to cover in brief. So now we can go look at chart. We're going to start by looking at some JSE companies. Then after we will look at the US companies. Then once I'm done with that, then I will give you an opportunity to ask some questions. Okay, so now let's see what's in there. Right, these are some of the companies that I'm planning to trade this coming week. One of the strong stock that got my attention is Redefine. We had Redefine for a while. So we spoke of Redefine a few weeks back. Well, we do have a private Telegram group, so where we discuss these companies. So when I say we spoke of this, it might not have happened on YouTube, but it's happening outside YouTube. So what we're looking at this. Remember, Redefine broke below this level here, and it's been trying to come and trade above this level. We saw somewhere in 2021 it attempted to break and trade above this level. Then it came back to find support. Then the stock was stuck in a limbo there. I had a position. It was a large position. When they announced the result somewhere around May, they didn't pay dividend because they were trying to do what they called the liquidity test, meaning that, remember, it's a real estate investment trust. By law, they're supposed to pass at least 75% of the income, the rental income, to the beneficiaries of that real estate investment trust. So in May, they didn't pass any distributions. But when they made the other I think it was the final result, or it doesn't matter whether it was the interim or the final result. When they announced that result going to December, then they paid a dividend. I think the dividend was about 80 cents or so, but that was the largest dividend that I've ever received as an investor. So then it attempted to go away before coming back again here, being stuck in this limbo. But as we can see, the stock has managed to stay above this level, which is just above 350 per share. So now we're starting to see some signs of that the stock is going to move up. We expect the stock to move up, and that's the reason for me for buying that particular share. So now we are just waiting. Our stop loss is somewhere around 360 per share. So we are going to hold that position for as long as it does not trigger our stop loss based on the share price. The share price is somewhere, it's below 450. So what does this mean? It means that the dividend yield is high in this company. When they paid the dividend in December, the dividend yield was somewhere around 14%. The share price, well, it hasn't went up anywhere, but the dividend yield is still above 10%. Remember, we don't invest because of the dividend yield. We invest because of the chart and also other factors, not just the dividend yield alone. So this is the stock that I'll be adding, one of the stocks that I'll be adding in my portfolio. But there is another stock within the property sector, which is F.I.R.E. I'm also looking at F.I.R.E. I have an interest there. I don't have a position yet, but I'm looking to establish the position there. So what I want to see from F.I.R.E., as you can see, it's still trading below this previous resistance level here, even though there was a time where it attempted to trade above this level. What I want to see the share price coming back above this level, so we can say maybe about 34 rand per share. Once it starts to trade above 34 rand per share, then I will start building another position there. Even here the dividend yield is a bit high because the share price is somewhere around 33 rand 88 cent or 33 rand 90 per share. So remember, we said in one of the videos that we did in the other channel, Mzansi Investor, that the relationship between the dividend yield, so let me try to write, don't mind my horrible handwriting. So the dividend yield is the annual dividend that you receive as an investor divided by the share price. So as you can see, the dividend yield has an inverse relationship with the share price. If the share price go down, the dividend yield it goes up, assuming that the dividend is fixed. We know that the dividend is not fixed. It depends on the profitability of the company. Some people, they always ask, if I buy this company, how much dividend I'm going to get? Remember, you are not entitled to the dividend. The business has to be profitable first before you can receive a dividend. Okay, so now that we know that if the share price is depressed, the dividend yield is high, so we shouldn't just always look at the dividend yield without looking at other factors, because we don't want to find ourselves in the position that we are buying a company, the company is not going anywhere, but we are still hopeful about the dividend yield. If that business is suppressed, it means that it's no longer growing, it's not getting customers, it's not generating revenue, therefore it's not profitable. Then even the dividend can be cancelled. Once the dividend is cancelled, the dividend yield, no matter how high it was, it just drops to zero. So that is something that you need to keep in mind whenever we are looking at companies, right? All of this is based on technical analysis and maybe a few commentary on fundamental analysis. Remember, guys, I'm not a fundamental analysis person. I don't have a background in commerce or accounting, finance, so I don't want to say things that will be incorrect and mislead you. Some of you already understand fundamental analysis, so all my comment is just purely based on technical analysis and the limited information that I know about a company based on what is available on the internet, right? Okay, so let's see another name. I have a list of few companies that I'm going to look at. So this is Omnia. Omnia is a fertilizer company. Well, it's chemicals and fertilizers. So in the US, during that conflict, we saw that some of the fertilizer stocks, they really went up nicely. But you know, the problem of Omnia, it's a South African company. So when everything is happening, also some laws in the country are happening. But as you can see, the stock is nice on an uptrend. We plotted this trend line here. So what we want to see, the stock trade above 70 rand per share. Then we are going to buy that. But at this moment, the share price is moving nice and steady. So we have a buy stop order on this here, so that if the share price break above 70 rand 50 or so, then we can be able to grab that opportunity and get into the stock. So there are so many levels that the share price can go up to. So it can go to 80 rand, it can also potentially go to about 110 rand. Remember, nothing is certain. We're not saying that the stock is going to go up there once it break above 71 rand per share or so. So what we always do for ourselves to ensure that we limit our losses, we always use a stop loss. You can set a stop loss somewhere around 60 rand per share, or you can just have a stop loss below this level, because we don't control the market. We don't know when the market is going to decide that it's going to reverse. So always have a stop loss. But at this moment, with the shortage of fertilizer in some European countries, well, okay, apologies about that. We had